Hello traders everywhere, Adam Hewison here, co-founder of MarketClub with your 1 p.m. market update for Monday, the 21st of November, the week of Thanksgiving, of course. Just ask yourself this, is obviously these markets are under a lot of pressure, and we're going to cover them all today and share with you our thoughts and ideas about those markets, but sometimes one-on-one Market Club coaching is the best way to do things. And I'll tell you the reason why. We had an interesting comment on our blog, someone who lost about $70,000 or $80,000 trying to go it alone. This is a much easier way to do it. Just learn how the markets really work. It'll save you a potential fortune. So you can give us a call at 877-219-1482. It's a free consultation and a free call. What are you waiting for? So give us a call there. Hey, it's Moody's, France, the SUPERCOMMITEE, you name it, it's all toxic for the market right now. Traders looking for good news are going to be hard-pressed this week as everything seems to be hitting the fan at the same time. Now we have Moody's Investor Services warning about a possible downgrade of France's credit. It all seems to be feeding off itself. And let's not forget the other credit bombs like Italy, Greece, Spain, Portugal, and Ireland. This is one mega mess that's not going to go away easily gotten out of. I cannot see how the U.S. can avoid and skate around this contagion effect. The U.S. does a lot of business, or used to do, with Europe. If Europe is quickly slowing down into a recession/depression, they're not going to be importing goods from either U.S. or China. That in turn pushes the U.S. and the China into a recession. Last week, we informed all readers of this blog that our trade triangles in the S&P 500 had turned red, indicating that a bear market was in fact. That was last Thursday. We have now seen that move spill over to other markets as the gold liquidation and the softness in other markets like crude oil. Normally, gold is the last refuge to protect buying power, but for the past 8 days, gold has come under tremendous liquidation pressure, dropping over $130, and in doing so, triggering a weekly trade triangle. I'll talk about that in just a little bit. As we stated last week, no one has seen a global economic picture like this before, and therefore no one has a clue on how to solve it. The only way to interpret this, in my opinion, is to look at what the market is doing. The market doesn't lie, and it's the sum total of everyone's thinking. The market is the best barometer we have to judge global economic pressures, and right now it's telling us that the economic climate is going to be troublesome, to say the least. Now let's go to the charts and the video and see how we can create and maintain your wealth in 2011. So don't forget, give us a call. It's a free consultation and a free call to Market Club for one-on-one Market Club coaching. Could be the best move you make this year for 2012. So let's go to the charts. We're right at our portfolio. You can see that we are down 2.26% right now in the S&P 500, minus 100, which we showed you last week. But also for the year so far, the S&P is down over 5.5% as we speak, so not a good thing. Also, that includes the Dow, which is negative for the first time this year, and also the S&P 5, the NASDAQ, which is down 5.3%. The biggest loser, of course, is the S&P 500. That's why we focus on this so often when we do our daily updates. So here we have it. Here's the chart. You can see our trade triangles are basically negative, 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 minus 100. Here's where we've got the major signal. As you know, our trade triangles have been negative for quite some time on the monthly. They never did change. That's why we never got bullish in this whole run up here, and people was really kind of complaining and saying, well, you missed the move, you missed the move. I didn't think so. And obviously this action today pushes this market way down into new territory. Can we go lower? Yeah, we're looking for the 1160 area, which is a 61% Fibonacci retracement area as the next possible stop on the S&P 500. So it's still a ways from here. So I wouldn't be too anxious to catch a falling knife, as they say. So trend is down. The trade triangles are down. Now going down a little further here, you can see we've just gotten into an oversold territory. Can we stay there? Yes, we can. And also on the MACD, it's still negative. So and we're building momentum. You can see the momentum going deeper and deeper. So I think we'll probably be down or on defensive for the balance of this week. Because it's a short week. We obviously have Thanksgiving on Thursday here in the U.S., and then we have an early close on Friday at 1 p.m. So I think potentially this could carry over until next week, early next week. So let's see how that plays out. Let's go to our next market. In the next market we're looking at is silver, and as you know, we've been negative on silver, and you can see the weekly trade triangle there that came in. Let me just take this off the screen. That came in on the 17th last week, and as you see, we're obviously under pressure today. And the 30 level is a big psychological level for us. If we go through that, we see a 29 something change print, means further liquidation in my mind. We're starting to step down in the downtrend trade channels, which I think is a negative also for this market. Into an oversold territory, much like we were here. Can it go lower? Yes, it can. And also you were negative on the MACD, all of which we pointed this out last week, so it should come as no surprise of people who regularly check in to watch our broadcast. So next market, and this is the big shocker for everybody. We had today at 1681, we had a signal to basically that the intermediate term trend had turned negative. Now you know on our dailies we actually had that a little higher up right here at 1754, so almost what is that, $85 ago. Really the trend is sort of turned around a little bit to the next side. So if you use our trade triangles, you can use them as a trade triangles as intermediate term trader or long-term trader. If you're a long-term trader, you should still be long this market, even with this pullback. So let's see how that works out. You're also getting into an oversold condition here, much like you got in silver and back here in September. But we may be down here for a while, so let's just scope this out just a little bit further year to date. And you can see we don't get into this territory that often, but when we do, it tends to be more of a buying opportunity than a selling opportunity. So I think we may want to give this market some leeway here, because there's a lot of liquidation. People are selling gold because they need to raise money to cover their stock options or whatever else they're trading. It's a money game, a margin game right now, as opposed to anything else that's going on. So let's go to our next market. The next market is going to be copper. Again, that turned into a negative today. You can see that the level was on the intermediate term trend at 331.80. It's 329 and change right now, another good signal. But again, we were never bullish on copper. You know, we've been bearish on copper for quite some time, from 413. That's almost a full buck ahead away, and it looks like that trend is continuing down. It's telling you we're going into an economic recession, because this market tends to very closely track the economic cycle and also what's going on with the stock market. So I think you want to watch that market very carefully. I think we're going to see a little bit more defensive play here. Certainly if we close down here below the 330 level, I think we'll see more pressure on this market for probably the balance of the week. Going to our next market, this is going to be the crude oil market. And if you may remember, we thought this area right here was a top, and I think it could well be a top. And in retrospect, it is an interim top. We've had some signals come in, obviously on a daily 97.61, but this market's just, had a really nice move up. You went from basically 75 up to 102 and change, and we're coming back down. I want to give this market some leeway. We're in a trading range, and we know what that means. You want to trade this using our trade, the Williams percent R, which is down here, and also on the downtrend trade challenge. Now we're back at the lower end of the downtrend trade challenge. I would not be surprised to see some bounce come in this market somewhere along the line here, not necessarily today, but maybe a little later on this week. So let's see how that plays out. We were very skeptical on the highs, and we're very skeptical on the lows right now. But if the economy slow down in the world, you're going to see more and more pressure come into this market, because there'll be less demand for crude oil and petroleum products. So next market is going to be the dollar index. Really interesting on this dollar index. We keep butting up against the 78.5 level. Can't seem to get through there. And we do have a lot of work underneath. We've talked about this big energy field. We've broken out to the upside, but every time we've gotten here, it seems like we've gotten hit and pulled back from those levels. So I think this is shaping up, the 78.5 levels, shaping up to be a very, very important level. And we need to decisively close over that level if we're going to see this market hit our target around 80, 79.50 to 80 on the upside. But again, you're still in a positive mode in the MACD. We're a little bit overbought. And look at how markets can stay overbought for quite some time and still be positive. So I think that's an important lesson to take away today, is just seeing how these markets really can stay in an overbought or oversold condition for quite some time, depending. The big thing, we had a blog posting this weekend, is more important than Italy, France, Spain, and Ireland, and that's perception. It's the perception of the market that's driving the market. Here we are, we're plus 90 in a strong uptrend, according to our trade trial technology, and you have to give that some leeway, and maybe tomorrow or the next day we'll see this market pop through this area, the 7850 area. Close over there is going to be, I think, very, very positive for this market, this index. So next market we're looking at is in the Reuters Jefferies CRB Commodity Index. As you know, we were up here. Our monthly trade triangle. You can go back, and it never wavered on this market. In fact, I'll take everything off, and I'll just put the monthly on, and we have to go back a little ways here. But you can see, let me just go a little further, and the monthly is right here at 335.10. So that was back in May. So we had a signal back in May, and this is the important thing to look at with your trade trials. Look at the longer-term trends to get a sense of where a market's headed. Now, can we go down to 300, 295? Absolutely. There's no reason why we can't, particularly if things take a grip in Europe, which they're slowly doing. Well, actually, doing very quickly, and we're still a lot of people in this country are just denying what's going on, and I think once they accept what's going on, we're going to see this market come under more and more pressure on the downside. So that's what we're looking at in the 6 markets we normally track, the markets we normally track. But I'm going to look at some other markets that we put in here that I think bear looking at today. First of all, we have the NASDAQ. You can see how that basically just collapsed. And I'm going to take off the Donchian trade channels just to give you an idea of what we're looking at. And I'll take off the stop and reverse and just give you a pure chart. And we'll look at this just the last 6 months. And you can see I'm going to put my tool on here, my illustrator, just to give you an idea, because I like to draw on the charts. It helps me visualize where things can go. And here we are. So we're looking at this sort of support level right here. The fact that this looks like a little mini head and shoulders and a neckline indicates potentially we can go from this level here, we talked about this last week, the 2,750 level, with a breakthrough, let's say 26, that's 150 points. So you could go to the 25 level. We're very close. We actually got there today, I think. So we've probably reached that for the time being. But nonetheless, this market's going to be on, it's not suddenly going to shoot up. It's going to be on the defensive, and it may just wear down and even still go lower. So I think that's the important thing. But I think for the week, this market's going to be pretty much on the defensive. Nobody wants to take any big positions before the Thanksgiving holiday. And of course, Wednesday will be a lot of people squaring up because Europe is open on Thursday, and that could be a real shocker for this market when we open for a very abbreviated session on Friday. Markets close at 1 o'clock, remember that. So let's take this off the screen. Let's go to our next market. This is the one I want to show you because I think it's pretty important. Now remember, this is a minus 100 on the NASDAQ, much like the S&P 500. So if we go to our next market, and that's going to be the Dow, and you can see here we just, if I put this in today, boom, you can see it hit right away. Now again, we don't put these things in after, these triangles in after the fact. These are when these actually occur. This is 1121. That's today, 11,630. The market is 11,494, so it's lower than that, but that is where the signal came in. And it looks to me you could see this market come under a little more pressure on the downside, possibly down to the 11,000 area. Would not be so surprised to see that happening. But generally speaking, I think this market's going to be on the defensive for the balance of the week, as I think all the equity markets are, until we get some clarity or something happens to maybe see a short covering rally. But hey, this is Adam Hewison. We've covered a lot of ground, a lot of markets. And again, I just want to reiterate, I think it's really, really important to learn how to trade the right way. It can save you so much money. We've got a great team with PMI who are working with us. We've got some very, very good lessons, and understanding how the markets work can really, really help you in the future. So give us a call. It's free, 877-219-1482. It's a free consultation. You've got nothing to lose and everything to gain. So have a great afternoon, a great day trading. I'll be back tomorrow at the same time, the same place. And thank you so much for taking the time to watch this broadcast.